Hi, Kate 11th. Today we are doing income statement, one of the big and easy topics in our syllabus. So with that in mind, sit back, relax, and enjoy the ride. Okay, what we have here is the income statement of Star Traders for the year ending 28 February 2018. Important to note here is there are two sections in our pre-adjustment trial balance. The first one deals with balance sheet accounts, and the second one is what we have called nominal account section. This right here is what you'll focus mainly on. Remember, if you master income statement, it's easy to pass accounting. So know your format and know which section to focus mainly on. All right, Kate 11s. Let's read further down. Before we get to adjustments, I always advise my learners to subtract debtors allowance if given from the sales figure. These two go hand in hand. Debtors allowances decrease the value of your sales figure because here debtors may have been overcharged, so you have to reverse that entry, or debtors may have returned the goods, so they decrease the value of our sales. So you subtract this 2,292,660 from 29,520. Okay, let's go to our adjustments. We are told that no entries were made for goods sold on credit for 11,200. What happened to your sales? Your sales increased. So it means this 11,200, you'll add to that sales figure. There's 2,292,660. So let's go to our question paper, to our answer book rather. You'll note that I have already subtracted this. So it means right here, this was given to you, so you'll say 2,292,660, add this 11,200, the sales amount, which was not recorded, you subtract the debtors allowance, it gives you this answer, 2,274,340. Then followed by that is cost of sales. Let's go to our question paper. Cost of sales there amounts to 1,066,880. And remember we have this 11,200 and the markup is 75% on cost. What is a markup? A markup is the additional cost or percent you add to 100. 100 being your cost price value. So it's the percentage you assign to the cost price, which is 100%. So you add whatever percentage markup you are given to 100, it will give you the selling price. In this case, we are given the selling price. So in accounting, what you are looking for becomes your numerator and what you have is your denominator. So it means when you want your selling price will be your numerator, which will be 175. So in this case, we are looking for 100 over how much? Over 175. So let's go to our workings there to check our cost price. Our cost price will be 6,400. 11,200 multiplied by 100. 100 being the cost price which we are looking for. And then divided by 175. Then it gives us 6,400. That 6,400 you add to the cost of sales amount because it was not added. It was not recorded when we worked out our cost of sales. So when you add the two together, they give you 1,073,280 in brackets. When you subtract 1,073,280 from 2,274,340, they give you 1,201,060. This is our gross profit. Then we have the second adjustment. This second adjustment talks about bad debts. Let's hear what they say. They say a check for 2,800 was received. Remember, you can receive a check or issue a check. When you receive a check, it means you received an income. When you issue a check, you made a payment. There's a difference there. Although a check talks to payments. So they say a check was received from an insolvent estate of a debtor, meaning this debtor could no longer afford to pay their debts, so they had to be liquidated. So here they say we received 2,800 as a final dividend of 40 cents in the rent. So this means for every rent you pay 40 cents or you receive 40 cents. The balance must be written off. So this balance we add to our bad debts under operating expenses. So how will we get the amount we have to subtract? Let's go to the wages. We will simply say 60. 60 is what you are looking for. What you have is 40. What you are looking for becomes what? Your numerator, and what you have becomes your denominator. So 60 over 40 multiplied by 2,800, it gives you 4,200. This right there will be your bad debts figure. Or you can simply work backwards. You'll say 2,800 multiplied by 100 divided by what you have, which is 40. It gives you 7,000. So you want to determine the bad debts figure. How will you work it out? You'll say I receive 40 and I lose 60. So I'll say, what am I looking for? I'm looking for a 60. You'll say 60 over 100 multiplied by 7,000. It gives you 4,200. That you'll add to your bad debts. Bad debts under our operating expenses. 4,200. We were already given 10,000 there. So when you add the two together, they give you 12,400. We go to the next adjustment. They say provision for bad debts or allowance for credit losses must be adjusted to 4,600. Remember, the difference between what you had at the beginning of the year and what you have at the end of the year will either be an expense or an income. So when you have an income, let's go to our trial balance to check exactly when do we have an income. There, 5,000 is what you had anticipated to lose, but at the end of the year, you realize that you have to adjust your estimates of the debtors who you think will not pay you. You adjust it down to 4,600. So it means you now have an income. You have an income of 400, 5,000 there. 5,000 minus 4,600 gives you 5,000 minus 4,600, it gives you 400. So this we will take to our incomes there. Provision for bad debts adjustment there, it gives us 400. This is part of our income. Then they say stock on hand according to physical stock taking on 28 February 2018 was 312,440, and they say 80% of packing material was used during the year. Note the reversal for packing material on hand on 1 March 2017, the beginning of the current financial year, was not done. So this affects the packing material figure there. Remember, let's go. We are told that the consumable stores on hand packing material 40,000, and they say what? This was not reversed. So it means this was not taken into account when we calculated our stock on hand. So this right here, they say we also have packing material there 14,000. So, and they say 80% of packing material was used during the year. So you only used 80%. So in working out our packing material under operating expenses, what will we do? We'll simply say 40,000, which you did not record, plus 14,000. It gives you how much? Let's take out our calculator. It gives you 54,000 there. 14,000 plus 40,000, it gives you 54,000. And then they say you only used how much of this 54,000? You used only 80%. So you say 80 over 100, it gives you 43,200. This is how much you used during the year. So that's your expense. Packing material there, 43,200, you take to them final answers column, and then to work out exactly how much you have to subtract, you'll say this which you did not use, you subtract. So we will say we will add the 2 minus what? Minus 20%, which should be, or you can simply say 43,200 minus 54,000. It gives you 10,800. That 10,800 you subtract exactly like I did here. You can simply say minus open bracket 54,000 multiplied by 20%, or work it out separately. It will give you the same answer and you'll be given the same amount of marks. So this right here is our final answer. Then we are told that we have trading stock there on hand. Remember, we have trading stock deficit and trading stock surplus. In this case, we have a trading stock surplus, and trading stock surplus is taken to our income. Remember, what led to a trading stock surplus in this case is this figure 6,400, which was not taken into account. So it affects your opening stock. So when you compare the two, you realize that you have more on hand than you had anticipated. So it means you now have more stock. You now have income in accounting terms. So how do we get our trading stock surplus? You say 316,240 minus 312,440 minus 6,400 cost price there gives you 2,600. Remember, whenever you sell stock, the value of that stock decreases, or the value of stock you have in the business decreases because you now have sold. So we have 2,600 there. Let's go to our there. 2,600 is how much you have as your trading stock surplus. When you add, okay, before we add, they say, number 5, rent was decreased by 10% with effect from 1 January 2018. Rent includes amount for March. So remember, the financial year ends when? 28 February. So it means here we have what you call deferred income or income received in advance. So income received in advance, anything you receive or anything you pay beyond the current financial year, you subtract. So in this case, we need to subtract this amount for March. But they say it was decreased. So it means at some point you received 10% less. You received 10% less. So how do we work this out? We will simply say you received 100% for how many months? Let's go to our timeline. Here we have March until February. You received When did this increase or decrease rather happen? This decrease happened on the 1st of January 2018. The 1st of January 2018. So here you'll count how many hundreds you received. You start from March, April, May, June, July, August, September, October, November, December. 10 months you received 100% for. So how do we work it out? 100 multiplied by 100 multiplied by 10, it gives you 1000. By 10, it gives you 1000. Then you go to your workings. Let's go to our workings. There, 1000. And then the next step is you received 90% or 10% less. So that amounts to 90. For how many months? Let's go to our timeline. From January to March. So it's March, it's January, February, and March. 3 months. So you'll say 90 times 3, it gives you 270. You add this 270 to 1000, it gives you 1270. You go to your pre-adjustment trial balance. This you can solve with simultaneous equation, solving for x. Then you go to your question paper, pre-adjustment trial balance. The figure we have for rent income. Where is our rent income? 247,640. We want to know how much we have to subtract, and it's included here. So how do we work it out? We simply say that amount, 247,650 divided by 1,270, it gives you 195. This 195 you multiply by 90. It gives you 17,550. 17,550 you take to your incomes. You take to your incomes there, but you subtract because you received an income in advance. So you are not supposed to receive this 17,550. Remember, income received in advance is a liability. So we take to our trade and other payables in the statement of financial position or balance sheet under current liabilities. So this right here, we subtract 247,650 minus 17,550. It gives you 230,100. Easy accounting. You just have to practice and ask questions. Then they say an advertising contract for 14,400 was paid for the period 1 January 2018 to 31 December 2018. What do we have here? Remember, you paid an expense in advance. So we have prepaid expense. So you subtract what you paid in advance, what you prepaid. So they say 14,400 was paid for the period 1 January until 31st December. We only want what belongs to us, what we paid for the current financial year. What we have to record in the next financial year, we will take care of it in the next financial year. So the first step is to determine how much is the monthly advertising here. So you say 14,400 divided by how many months? From 1 January until December, it's 12 months. So you divide by 12, it gives you 1,200. Then the next step is, how much am I supposed to subtract and how much am I supposed to pay? You are supposed to only pay for 2 months in the current financial year. So it will be January to February, 2 months. Then you multiply by 2, it gives you 2,400. Then from this 14,400, let's minus 2,400. 14,400, it gives us 12,000. This 12,000 is what we have to subtract from our advertising. Let's go to our answer book. Under expenses, advertising there. What we are given, we subtract what we don't have to pay in the current financial year because we want to apply what we call the matching principle. You remember in my previous video, we went through different adjustments, year-end adjustments. So this right here, you subtract 39,240 minus 12,000, it gives you 27,240. You'll realize that I don't go from line to line. I don't say because discount allowance is the first line item in our operating expenses, I'll go through all the adjustments to check for discount allowance. That will waste a lot of time and we don't have time in accounting. We think and write fast. Payments in respect of internet services and the telephone are included in the sundry expenses account. The telephone account of 4,060 for February will only be paid in March. So this means a business now owes their supplier amount to the amount of 4,060. So this has to be added to our expenses, accrued expense. So you'll take that 4,060 to your sundry expenses. We add this 4,060. It will give us how much? 269,260. 265,200 plus 4,060 gives you 269,260. Let's go to our next adjustment. The next adjustment says commission on sales of 7,320 from TV Tech Limited is due to the business. So TV Tech Limited created what we call accrued income for us. This is the income you are supposed to receive, but you did not. So you still have to record it to apply the matching principle. So 7,320 we will add to our commission income under operating income. The commission income 7,320. We will add there, it gives us 30,000. Now that we have the operating income covered, we add all of them, they amount to 277,120. When you add 1,201,060 to 277,120, they all give you 1,478,180. We have done what? We have done packing material, we have done advertising, we have done sundry expenses, we have done bad debts, we are given repairs, we are given discount allowed vehicle expenses, we need to do salaries, we also need to do that will be it. Then depreciation is also given. Depreciation is given. Let's go to our question paper. Adjustment number 9 says the bookkeeper has correctly posted the cost salary to the general ledger, but they neglected to post the deductions and contributions. They neglected or forgot to post the deductions and contributions. Extract from the salaries journal. So if they neglected, it means we still have to add what? Contributions, because contributions are what? Are cost to the company. they add to the expenses. On top of the salary you pay your employees. They say the business contributes a third or 1/3 towards the pension fund and on a rent-to-rent basis for the UIF, meaning you match what the employee pays towards UIF. If an employee pays 1,000, you match that 1,000 with another 1,000. For UIF, it's quite simple. We will take this 900 and add to what? They say all expenses related to salaries are recorded in one expense account. So it means right here, we will add this 900. Let's go to our answer book. We added the amounts together. So we don't separate contributions. We add them to salaries. So we'll say 336,800 plus 900. Where did I get this 2,100 from? Let's find out. They say the business contributes a third. So what's a third? Of pension fund. So when an employee pays 6,300, you pay only a third of what they pay. So we say 6,300 multiplied by 1/3. It gives us 2,100. 2,100 there. We'll say 2,100 plus 900 plus 336, 800. It gives us 339,800. Then, now that you have covered all the operating expenses, how much do they amount to? They amount to 789,680. You add all of them, they give you this much. Then we have what you call profit, operating profit rather. We have operating profit. So you say 1,478,180 minus 789,680. It gives your operating profit to be 688,800. That's your operating profit. What do we get after that? We have what you call interest income or finance income. We are already given 19,600. Then let's go to our question paper. This other adjustment talks to loan. What are they saying about loan? They say we got loan from Infinity Bank and interest is capitalized. So when interest is capitalized, it means when they calculate the balance you owe them, they will include interest from the previous month to get another interest. So another interest gives you another interest. So this is the compounding effect. So they say, how do we get our interest expense if not given in our answer book? Let's go. They say finance cost or interest expense. Don't worry about interest income and profit before interest expense. We'll come to those. We were already given 29,260. Where did they get that 29,260? Let's go to our pre-adjustment trial balance. The interest expense. Interest on overdraft, 29,260. So you take them and then it means you are left with this interest on loan. How do you get interest on loan? They say repayments for the year including interest amounted to 28,080 and the balance as per loan statement from Infinity at the end of the financial year amounted to 152,560. There is something missing here. What's that? The opening balance. Let's go to our balance sheet account section. there. At the beginning of the year, we owed Infinity Bank 131,520. So to get our interest on loan, we'll simply say, to save time, let's just go to our workings. You'll subtract the opening balance from the closing balance there. You'll simply say this opening balance 131,520 minus 152,560 gives you 21,040 rather. 21,040, and that 21,040 you add to this one, to 29,260. Your interest expense is 50,300. Then we are only left with interest income as well as profit before interest expense and net profit for the year. Remember, the purpose of income statement is to check how much profit you made in a particular financial year. Interest income, we are given 19,600. Let's go to our pre-adjustment trial balance to check where did they get the 10,000 from. Your interest there, they say interest income, overdue debtors accounts. You charged interest to debtors who paid late. You penalize them. So 19,600 we are given there, and they say interest on fixed deposit. You went to the bank, invested your money, they paid you interest. How much did you receive? You received 10,000. So you added the two together, they give you 29,600. Let's go to our answer book. There, 29,600. When you add operating profit to finance income, they work out to 718,400. Then you add these two and subtract interest expense of finance income, 50,300. Your net profit for the year will be 668,100. That will be it, grade 11s. I hope I've been of value to you, and you'll ask questions in the comments section. Contact me wherever you find me on Facebook, Twitter, and YouTube. I'll be available to answer your questions. With that, take care and learn and love accounting. Bye-bye.